Good morning, everybody. Today we're going to talk about a really important topic. I've got a lot of feedback lately with Canada Revenue Agency being late, with all of the errors, with all of the penalties, with all of the interest people are having to pay. Maybe this is a way to get yourself exempt. Maybe this is a way to get yourself exempt from those pretty harsh and severe penalties when you have become non-compliant with Canada Revenue Agency. So what we're going to talk about is correcting your Canadian taxes. And this is an area in the income tax world that it's a guide to voluntary disclosure, the required forms and filing processes. Again, I love to show you guys the form and walk through step by step because I think it makes it easier for you and less intimidating. I've also included the link on the Canada Revenue link on the front page of this slide to where this program is and the fillable forms for you to read more information. Okay, so for newcomers to Canada, the role of Canada Revenue Agency, okay, Canada Revenue Agency administers our tax laws for the Government of Canada and most provinces, federal tax laws. Provinces have their own provincial tax laws. Okay, they ensure compliance through programs such as this. We're going to focus on the Voluntary Disclosure Program today. They collect taxes, benefits, and the distribution and enforcement. Okay, they're to support taxpayers with resources and guidance for accurate filing. There is a taxpayer bill of rights. Okay, they're supposed to maintain trust through transparent cooperation with the public. So here's what we're going to look at. We're going to understand the Voluntary Disclosure Program. Okay, eligible criteria and key considerations, required forms and documentation, step-by-step filing process, and after submission, what happens. So understanding the program. How can you benefit from it? Maybe you can't. So let's take a look at this. So the purpose and benefits of the Voluntary Disclosure Program, encouraging voluntary compliance. So it encourages the taxpayers, or taxpayers meaning corporations, trusts, individuals, to correct errors without penalties. If you made honest errors and you were not compliant, hopefully this is an avenue for you. It promotes fairness. Okay, it ensures a fair process by allowing a disclosure process without prosecution, creating an equitable tax environment. Okay, it maintains trust. It builds trust between the taxpayers and Canada Revenue Agency, encouraging transparency and cooperation. Okay, so types of errors and omissions. How is it going to work, and does it automatically apply? So if you had unreported income in your past filings and it came to light later by you and your CPA, then you know what? This might be an avenue for you if Revenue Canada is not looking for you. Okay, so unreported income. Incorrect deductions. So if you made deductions and then you find out later, oh, there was a tax update. For example, principal residence. If you do not disclose this disposal of your principal residence, there's a penalty. All right? Or if you did make a deduction that you weren't supposed to, there's a chance you can you might have to pay taxes, but you may prevent penalties and interest from the government. If you omitted information, that was the Voluntary Disclosure Program on the principal residence deduction that I was referring to a few minutes ago, and inaccurate filings. Okay, so if you just made an error, T4s coming in late, those sorts of things, T3s, T5s, then you may have a chance here for some protection. So potential relief and limitations of the program. Okay, so relief from penalties. So the Voluntary Disclosure Program does provide relief from penalties and prosecution, helping you avoid legal consequences. But more importantly, the penalties and the interest alone are so severe. Usually, we go through a negotiation process first, but penalties and interest from Canada Revenue Agency are very severe. Interest charges continuing. You may be able to get your interest charges waived, okay, on amounts, owed that were not eliminated by filing this relief program. Okay, there are limitations. If there has already been an ongoing audit or investigation, you may be restricted eligibility for the program access to relief, meaning you might have to pay a bit of principal or penalties and interest, and maybe you just have to pay your taxes. Okay, there are limitations, and we'll see that better explained in the form. So eligibility criteria and the key considerations. Okay, who can apply? Okay, individuals, corporations, trusts, partnerships, all eligible to apply for voluntary disclosure programs. Okay, conditions for a disclosure: it has to be voluntary. You've come forward, it's complete, and it cannot relate to periods that under active CRA audit or investigation. So what's an example? Okay, so for example, you filed your personal tax return, but you forgot to disclose the principal residence sale. And you thought, well, why is that important? I don't have to pay taxes on it. It's my principal residence. Well, there's penalties if you do not disclose. Now, if you catch it before Revenue Canada does their notice of assessment, you can do the voluntary closure program application first and then amend your tax return. And that's how you're going to avoid the penalty. Now, you caught the error, they weren't looking for you, and you corrected it. Okay, that's a simple example. Conditions for a valid disclosure: you have to make it voluntarily, without coercion or prompting by authorities. In other words, CRA can't have discovered it. Okay, you are going to voluntarily disclose, and they haven't looked at it, you haven't spoken to anybody about it, at CRA, you're disclosing. So completeness of information: the disclosure must be complete and include all relevant details for accurate assessment. And we'll see that when we go through the actual form. Payment of taxes owing: all taxes must be paid as part of the valid disclosure process. You want to pay up front if you can, otherwise you're going to have to do a second step and apply under the relief program, okay? Information age requirement: your disclosure information must relate to tax matters at least 1 year past due. Okay, when might it lead to rejection? Okay, the timing of disclosure. Disclosures made during active audits or investigations may be rejected by authorities. Okay, incomplete information: if you didn't provide accurate information, it may lead to denial or disclosure of claims. And the reason I say, even if it's less than a year and you're going to make that adjustment that they haven't assessed yet, you file that notice of objection, because in some cases, assessments and issues aren't even being resolved for up to 18 months, 2 years after, not the 6 months, So I always file the RC 199 voluntary disclosure, and then I deal with the adjustment, just so I don't miss that deadline. Required forms and documentation. Okay, so it is an RC 199. You can download this form from the Revenue Canada website. It's PDF fillable. Okay, required disclosure details: you've got to give comprehensive information, and you'll see that we're going to go through step by step. You're going to have to quantify the errors, provide the backup documentation, the payment information, all of that. And importance of transparency, trust, just disclose everything. In doubt, talk to a professional. When I say disclose everything, I don't mean expose yourself. What I mean is, when you see our example, it's a payroll error. Disclose the salary, disclose when it was discovered, disclose the amount owing, disclose the amount paid, disclose the forms that have been filed. If in doubt, and if you feel you're going to expose yourself, talk to a CPA professional, okay? Or a trusted tax professional. Okay, so supporting documents and income tax returns. So you're going to have to provide your income tax returns, maybe the one you filed with the notice of assessment with the amended tax return and the amount of the change or the T1 adjustment. If you're a corporation, you'll probably be filing financial statements, and if there are notes to the financial statements, they're going to want that. If you have other supporting documents, for example, we're going to look at a payroll account error, you're going to want to include the PD7A and the T4 the amended T4 summary for your corporation. Okay, documents for corporations, trusts, and individuals. Corporations have to provide financial statements and tax filing compliance. In your corporation, you know you have GIFI. If it's a payroll account, you have a PD7A. If it's a GST account, you have your different GST forms. If it's a corporate account, RC, you have your T2. Trust documents, yes, T3, your filing, your notice of assessment on your trust. Individual documentations, your T1, that's your personal income tax return, an amended T4, a missing T4, T3, those sorts of things. So here's the step-by-step filing process. So completing the application, okay? And let's go right into it. You're going to complete the form, you're going to explain the errors, and you're going to ensure the form's accurate and complete. Okay, so on page 1 of the Voluntary Disclosure Program, okay, this is online, it's fillable. We've decided this is a corporation, ABC Limited, the information is fictitious, payroll number, and RP001, it means payroll. RP is payroll, RC is corporation, RT is GST, RZ is partnership, but RZ can also be T5s, if you're issuing dividends out of your corp, those sorts of things. Just a little hint there. Put the address of the business, a mailing address, okay? And then in this case, we've decided that because it's payroll and it's considered a trust area, very highly sensitive to Canada Revenue Agency, JD CPA, his address, and he's the one completing the form. And Canada Revenue Agency has to have either a letter on file or an RC59, a T1013 consent for the individuals. So this is the corporation online that JDCPA has the authorization to deal with this on your behalf. Now, so here we are, required information from the application. So we're explaining, okay, we had a new bookkeeper basically, and we had a individual who was a contractor, and partway through the year he transitioned to an employee, and unfortunately the bookkeeper and between the payroll department and the bookkeeper, they just kept paying him as a contractor as opposed to an employee. So then we have to go through everything that's past due, in this case, this is just for, the year 2023, so it's more than that 1 year requirement, yes. This is for GST. This is not applicable. We're not doing this on GST. Potentially, yes, this could be a penalty, could be incurred for this. And again, we're not doing GST. Is this a voluntary disclosure? Yes, it is. Okay. Did you go anywhere else, basically? Did you talk to a CRA representative? Are you aware of any enforcement action? No, 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 no. Complete. So is everything complete in the file? Yes, it is. Are you sending the supporting documentation? Yes, you are. Was there a payment made? Yes, the payment was made online. You're going to include the online receipt, and it was for $24,000. So you can see it really guides you through step by step here. Apologies, bouncing between screens. Now, page 3. Just get the highlighter going so you guys can see. So what forms? When it asks you, are all the amended forms filed? Well, because it was payroll, and you have to submit your payroll remittances, by the 15th of the following month, or maybe you even have to do them twice a month, depending on the salaries you're paying out and the size of the corporation. We had to redo a PD7A, what's called, and that's a form with your payroll number on it. And we had to redo the T4 and the summary. Okay, this is for the year 2023, so we qualify because it's more than a year. We're signing this form as at 2025. Okay, there was no future income or anything. This is more an expense. It was income to the taxpayer, but it was a trust account, for the employee, and we didn't make those payroll deductions, and that was our error. Okay, so you may have to pay the employee's portion here, you know, if you were the one that made the error. And those are things, you know, you'll discuss internally with your HR department. Right now, we're trying to deal with just Revenue Canada, you know, issues on this. So we're not dealing with any GSTs. So just no. You know, we're not dealing with domestic income. It's basically a payroll expense. It's a domestic expense. And then it's, you know, supporting documents. We've set it up above. It's on the payroll account, the PD7A and the T4 summary. Okay. The other thing that may happen as you recalculate your corporate taxes, depending you're in a loss, or we may have to refile the T2. We may have to refile the financial statements, because it is going to make a difference going from contractor to an employee. Okay, I'm just trying to keep this simple and focus on one area. Supplemental information. It's definitely a Canadian voluntary disclosure. All right, and then at the end of the form, the director signs. You always have, you know, the director or the CEO or whoever has the signing authority, and the CPA will sign off because he's prepared the form with all the supporting documentations. Now, here's the thing, okay? So we made this very simple. We just focused on the payroll. But there's actually a lot more that could happen. Like the T2 is going to have to be refiled, the corporate tax return, and the financial statements will have to be restated because the person was paid as a contractor, not as an employee. So this could also result in corporate taxes owing. It was, you know, just for illustration purposes, keeping it simple to give you an awareness. That would be for a much more in-depth presentation. So the next step now, how are you going to submit this to Canada Revenue Agency? Okay, everyone should be filing online by this point because there's fines for not filing online. I think there's $600. I can double check that, or you can fact check that yourself. You are required to file online these days. So we've made sure it's completed before the submission to avoid processing delays. We've got all the supporting documents and the submission methods, and it is going to Revenue Canada electronically according to their instructions. And because you've given your CPA authorization, they will file that online for you, but after you file. They can't file without consent, all right? So timelines, all right? This can take several months. This is why we filed the RC 199 ahead of time, and then we're going to be filing those the payroll adjustments and the T2 adjustments, so we're protected. In this case, we're making the assumption that Revenue Canada wasn't looking for them. It was an honest mistake. It changed midway, staffing shortages, it never got caught, and we're filing now and we're prepaying everything up front, okay? This will be a real paper nightmare, this one, because what they're going to do is Revenue Canada will now send you or your accountant an audit on your T4s for the 2023 year because it's a trust account and you missed that mistake, and it's a lot of work. So unless you have someone that's very experienced in the payroll department, and that you may want to look to your CPA doing all of this because it's going to trigger a lot of paperwork and a lot of adjustments, and you want it done right. You will receive an acknowledgement online. You can go and check and it'll say, you know, what's been received, and it'll say pending, and it'll give you a number, and they'll send you an email. You can access all this information online. And when it's done, you'll get a decision later. You know, is it accepted, is it rejected, or the next steps. Now, as long as CRA was not looking for you, as long as you voluntarily came forward, as long as it is a valid error and not tax evasion under any of the anti-avoidance rules, you know, in the perfect scenario, you will be exempt from penalties and interest, okay? Having said that, we know that the government is broke and we know they're looking for money. So it may be, you know, a bit of a paper back and forth and a lot of work, but follow through. You do have the Taxpayer Bill of Rights. So after you submit it, what to to expect. We sort of touched on that. They're going to look at it carefully, its validity, before making a decision. They're going to, they might accept it right away from relief of penalties, you know. It's clean cut, everything's there, the information. The more complete your information is with the government, the better. Now, please be patient, just like everyone in Canada, where experienced labor and professionals and tradespeople, it's short. We really have a shortness of experienced people in the workforce. So you might have somebody at Revenue Canada that's new and they've missed it, they don't understand it. So ask your appeal to be bumped up to a senior agent. They do negotiate and everything before anything goes to court, before anything like that. They're required to negotiate and work through things. Okay, so if they request additional information, provide it. Okay, make this a priority. If you want this out of your life and correct it, you know, provide it as soon as possible. If, again, here's where we're going to go the next step, and we'll discuss this in another presentation. If they decline it and you feel that they are not being fair, we can go to the next step, what's called notice of objection, a T400. And I'm going to prepare that in a separate presentation this week for you guys on how to go that next step. Okay, so this is what could happen. Okay, so mandatory tax and interest payments. So in our case, we paid the taxes right up front. We knew it was a trust account, it was our fault, and we corrected it. And yes, it was 2 years later, you know, but we did the right thing and we corrected it. So we're asking that the interest and the penalties are waived. Plus, Revenue Canada wasn't looking for us. Okay, now, if you do not have the money, say you're a small business, to pay that $24,000 liability, you can negotiate terms if the full payment isn't possible. Now, this is where your eligibility for interest relief may not be accepted. Okay, you know, negotiate, justify, and do your best. Have your professional assist with that. Okay. Appeals, reviews, and record keeping. So if you have to file an appeal, basically that's the notice of objection we're talking about on the T400. If you are not happy with their outcome, you've got to file that notice of objection pretty quick. Okay, do not leave it for 1, 2, 3 years. In this case, 90 days. Get it in there. Even if you don't have a lot of verbiage, get it in so that the time stops ticking for you and you've got your notice of objection in ahead of time. It's best if you can have all your information in advance. And like I said, this could turn into a very complicated manner with all the adjustments on all the tax accounts. So I would file this immediately with complete information as to why. And the importance of record keeping. So if you've maintained good records throughout this RC 199 disclosure, it's very easy for your CPA or yourself, if you feel confident, to file that notice of objection. You know, if you are not confident, please seek out a professional. So, conclusion, okay, there is an opportunity for correction. It can help protect you because no penalties, no interest. You're always going to have to pay the taxes, okay? The eligibility criteria we talked about, who qualifies, and it's, you know, you must ensure proper participation, meaning paperwork, trust, be honest, full disclosure, but also seek professional advice. So you're not exposing yourself by saying the wrong thing because you don't understand, right? If you don't understand the process, if you don't understand taxes, get that professional. And the filing process, the importance. You have to know the forms that are required, and you have to know all the forms that have to be adjusted. So for example, if you decide, okay, I'm just filing this RC 199, but you don't know how to adjust for the payroll account, you don't know how to adjust for the corporate tax account, you don't know how to adjust the financial statements, you don't know how to adjust for the T4 and the T4 summary, you've exposed your employee to risk, maybe it's a good time to seek someone that knows the impact and can deal with everything at once for you. So once again, please, if you enjoyed this, please like, subscribe. It really helps me continue to do these free educational videos. and I look forward to seeing you on the Notice of Objection T400. If your RC199 or any notice of assessment is rejected, that would be the next step for us. Thank you very much.